Raghavan Seetharaman is the Chief Executive Officer at Doha Bank. Good morning,
sir.
Mark. Thank you very much for joining us today.
My pleasure.
Oil's creeping higher, isn't it? Are you getting jittery?
Well, it was expected. If you look at it, oil futures are going up. Way back in July 2008, it was only oil futures which is driving to 147. Conceptually, the consumption has not increased. Of course, the supply chain has been disrupted on account of the Middle East unrest, especially Libya has been put to rest. So it is likely to go further. Dollar index is weak. People are hedging the risk by buying commodity futures. That's the reflection as such.
Can the global economy withstand oil prices back to those levels of a couple of years back?
How do you fix it? The question remains, OPEC controls only 45% of the oil space, and Saudi Arabia is supposed to comply, 9 million barrels. It's taking steps. Non-OPEC also plays a role. So conceptually, the reorganization is taking place in the supply chain. It's concern for everyone. Emerging markets are in major stress. They have to contend the inflation. This is a major threat. Global recovery definitely at stake if oil price is not getting streamlined.
I mean, you've been watching events in the Middle East, of course. You are there at the hub of events, and we've had oil, of course, exports from Libya being disrupted. I mean, how big is the risk that one of the big suppliers, like Saudi Arabia, we have a sort of a similar story? Do you think it's stopping with Libya, or does it go on now? Is there a real threat of contagion?
Well, we can't mix up Egypt or Tunisia or Libya with the Gulf states. They are $1 trillion block. They run in fiscal surplus, current account surplus. What is required is social governance in the reorganization in the social stability. And that's what the affluents can afford to make. They have to distribute the wealth. They have to necessarily make sure the gross welfare to the mass comes in. And those are the initiatives taken by many of the Gulf states. I'm sure financial stability is there. If you're running on 20% of the GDP as your current account surplus, there's no reason why you have to be dysfunctional. You have to bring in healthcare and education and essentials to the gross mass.
So you're not worried about the macroeconomic impact on the Gulf states. What about the North African states? Is there an impact, and how big an impact?
Well, it had a terrific impact. If you look at it, January 25th, when Egypt was put to test, and the geopolitical tension was visibly clear. The entire the Arab states, Maghreb to Mashraq, 22 countries were put in one basket, and stock market was taking a in block 6 states put together, Gulf states, 16% down. Credit default swap was also up. Now people have realized you have to differentiate between the Gulf states as well as North Africa. Then that has been the reflection of late in the last 2 to 3 weeks. Now the market is back on track, and the bond market is also recovering. Stock market is stable and functional. The economy as a whole, if the oil price is going to cost over $100, everyone is going to run in fiscal and current account investable surplus.
Got to get your view on Europe, what's been happening with Portugal, the ECB hiking rates. I mean, is that it? No more bailouts for periphery countries? That seems to be a view emerging.
Well, we have said this when Greece was put to test. And Ireland came, we bailed out 85 billion. Everything is defied the logic. The measurement mechanism has failed. The monetary policy and fiscal policy has to converge. There has to be an alignment. While the monetary policy is centralized, fiscal policy was not measured and managed and controlled. I foresee a contagion impact across.